Welcome back to the Dividend Diplomats YouTube channel. You've got Lanny and Bert, the two DDs, and we're here to talk about the big dividend increases this past week of June.
We can't wait, everybody. We got four bangers for you, but before we get started, you know what to do. Smash that subscribe button. Give us a thumbs up. We are getting so freaking close to 10,000 subscribers. Thank you, everybody. Help us out. Again, smash the subscribe button. We really appreciate it. Everyone, let's crush it. We've got some dividend increases to bring to you.
All right, baby. Here we go. This last week of June, the last full week of June, we had some massive dividend increases as Bert chugs a beer. What? Give me another beer. What? So we had four big dividend increases we wanted to talk about. Three companies, you know the name. One you more than likely don't, but it kind of fits in our favorite industry.
And it's also very telling. It's a sign of what's to come in the industry with a lot of the other people, and that's why we want to feature it too.
It is what it is coming up and what's to come. I couldn't agree more, Bert. And the S&P 500, continues to churn along in the stock market. And as dividend investors, there's always, we need some more news as the S&P 500 almost hits 4,300.
Yeah, I want to see something else on the headlines besides S&P 500 record high, S&P 500 another record high. We need some better dividend news that's really going to get us excited.
Right. And that's why we come out with these dividend increase videos. We want to share the community, the news that, hey, companies are doing well post this pandemic. Dividend increases are back. And that's one of the beauties of owning dividend growth stocks is that you get to watch your passive income go up without you having to lift a finger.
That's exactly it. It's easy. It truly is passive. So many people will tell you you can have passive income here, but it requires X number of hours to make it happen. That's not passive. Dividend investing, dividend growth investing is truly passive, and we love it. We think it's the easiest form of passive income, to be honest.
It's not a get rich quick thing. It's hey, we want to buy and hold these stocks for the long term. And essentially, they're like little employees for you. They're gonna earn their raises, and most of these raises are going to be the biggest raise that you've never got at your place of employment. Definitely better than the rates of inflation. So, I mean, I could sit here and look at these increases, and I could probably argue that at least three could be some massive increases compared to what pay raises people get and the rates of inflation.
Exactly, Lanny. I couldn't have said it better myself. Do you think it's time? Should we start teeing up here? Dividend increase number one.
Let's put the tee. Let's lay the ball down. Let's see what Shooter's got. Shooter. Let's see what you got, Bird. Let's start off with number one. I know this one hits hard for you.
Yeah, it hit hard for both of us. And it's actually oddly been an industry that we've been talking about a lot recently on our YouTube channel. I bet going into 2021, you would not have expected June 2021 to be the month of the grocery store videos for the Dividend Diplomats, but that's what it turned into. We've just happened to be covering a lot of great undervalued stocks in the sector.
We're from Cleveland, and like the Browns say, dogs gotta eat.
Yeah, it hits home for me because I met my wife when I worked at a grocery store, so I always have a sweet spot here for grocery stores back when I was in the bakery, but that's a different story. This company here, Lanny, break the news down. Who was it?
So we're not talking about our other favorite grocer right now, Spartan Nash, which is SPTM, but we are talking about Kroger. KR is the ticker symbol. And we even mentioned this in the last video that we cannot wait to see what Kroger does with that dividend increase pretty much this last full week of June. And they came out with a double-digit dividend increase of 16.7% increase, Bert.
That is huge. That crushes inflation. And you know what? We knew it. We knew Kroger was going to deliver. That beats their 5-year average dividend growth rate too. But if you followed Kroger closely, they have just crushed it over the last 52 weeks. If you want to talk about companies that have adapted well to the pandemic, you're not going to find a better one than Kroger. They've adapted. They helped customers get through it, continuing to battle these Amazons, Targets, and other people that are also entering into the grocery sector. Kroger, with their massive network across the country, has continued to grow that dividend by double digits.
Kroger's doing well. I like Kroger's balance sheet also. Warren Buffett obviously likes it because he was scooping up shares. I know I own Kroger, but I'm pretty sure you own a lot of Kroger.
You're darn right I do.
So the impact was real. It was definitely felt, and we didn't have to do much outside of just owning the stock.
Yeah, they're not a dividend aristocrat yet, but they've increased their dividend now for double-digit consecutive years. They're probably a decade or so away here from becoming a dividend aristocrat, which is a company that has increased its dividend for 25 consecutive years. So it's a very solid streak. You like it because they've been increasing their dividend through the financial crisis, through the pandemic now. So they've made it through two of the toughest economic cycles we've seen recently.
Currently yielding 2.14%. That was Kroger, a 16.7% increase. Touche, congratulations, shareholders. That's the first big one.
So we are moving right into the restaurant sector now here with dividend stock number 2. This company is Darden Restaurants, ticker symbol DRI. Now you may be asking yourself, haven't we talked about them and haven't we heard about their dividend increases over the last few months? Because if I recall, Lanny, I thought we covered their dividend increase last quarter when they announced it.
Darden has been very busy. And for those that don't know Darden, think of your Olive Garden, your Bahama Breezes, your Capitol Grill, Longhorn Steakhouse, Yard House, et cetera, et cetera. So just to give you kind of a frame of mind, if you've never said, oh, I don't know what a Darden restaurant is, they're a portfolio of brands and restaurants.
Baloney, if you've driven anywhere in any kind of suburb, you have seen a Darden restaurant. That is for certain. I can promise you that.
So yeah, you're right. We just talked about them probably back in, end of March, early April, because during the pandemic, Darden Restaurants, again, ticker symbol DRI, had a dividend of 88 cents. And Bert, you can correct me if I'm wrong, during or right before the pandemic. But then they actually had to stop that dividend payment. And I believe they brought it back in the third quarter of 2020, but they didn't bring it back at the 88 cents. They brought it back at, 30 cents.
Yep. No, you're absolutely right. It was 30 cents. Nice recollection there, Lanny.
And then I think each quarter, right? What's happened each quarter since then?
Yeah, in March, they announced an increase the next quarter from 37 cents per share to 88 cents. So they brought it back to that pre-pandemic level. And then now what did they do? The next quarter, they're like, hold my beer last quarter. This quarter is going to be even better. We're going to increase that quarterly dividend from 88 cents to $1.10. So it's just well above where it was before the pandemic. That's a massive dividend increase right there.
Yeah, I mean, they've already increased it from 30 to 37, 37 to 88, 88 back to $1.10 or up $1.10. So now your dividend payout is higher than what it was before the pandemic. I mean, Darden is doing very well right now. I think people had, pent up demand to go back out to restaurants,
Yeah, and we'll see if this continues. I doubt they're going to keep increasing it every quarter. But to your point, Lanny, people are going back out. They're spending money at the restaurants now. Let's see how much cash they have to put to work. It's crazy that their dividend yield is over 3% after this last dividend increase. It's insane where this company's dividend has gone in one of the sectors that was hit hardest during the pandemic.
So yeah, they had a 25% increase then from 88 cents to $1.10. If you look at their earnings release, they had 79.5% sales growth in that fourth quarter alone. And they had same restaurant sales increase of 90%. So, I mean, they're blowing stuff out of the water right now. Granted, everything was pretty much shut down.
I was going to say there is some perspective that we need to make sure we cover there, and I'm glad you at least brought that up in there.
One could only think that they really put their cost measurement plan in place as well. So that's also helping them right now. So yeah, Darden Restaurants, ticker symbol DRI. If you weathered the storm, you're now better. You're actually on the better end now after coming out of the storm.
And that's what's the craziest thing about this. They didn't just reinstate their dividend. They didn't just bring it back to a level that was still before the pandemic. You are earning more as a shareholder via dividend today than you were before the pandemic started. How nuts is that?
So that was the second dividend stock. Now, Bert, take away this third dividend growth. real estate stock.
Real estate stock, malls, everybody's favorite sector here. Simon Property Group's ticker symbol SPG. Unlike Darden, though, this dividend increase is not going to bring them back to their pre-pandemic level. Back in February 2020, before the pandemic started, their last quarterly dividend then was $2.10 per share. Pandemic hits June, they announced their next dividend, cut it down to $1.30. Think about it. Nobody was shopping. Malls were one of the hardest hit sectors as well, in addition to restaurant and retail. So of course they're going to cut their dividend. Finally, fast forward to June 2021, here they are increasing their dividend slightly. So their new quarterly dividend is $1.40, a 10-cent increase from $1.30. So that's what, a 7.7% increase there, Lanny?
A nice 7.7% increase. Simon Property Group, the big mall property owner, they must be getting much more foot traction right now. Malls must be making more money within the centers. Hopefully these, retail stores are still solid anchors. And, again, I think we have two in our Northeast Ohio area with the Aurora Outlet Mall, and we have Aurora Farms Outlet Mall, and we have Summit Mall down in the Akron, Ohio.
They had one right where I used to grow up too, but rest in peace of that mall. They're blowing that thing up because there are no tenants in there anymore. But that was even gone before the pandemic. That mall was struggling before then, but that's neither here or there. But taking a step back, you could understand why they may not be able to increase their dividend the same way that Darden was able to, because they probably lost a lot of tenants in the pandemic. A lot of stores probably opted just not to reopen. People opted not to renew their leases, either because they couldn't sustain their business or they're deciding to shrink their footprint. See how we talked about that with Best Buy in the last video, how Best Buy's announcing a shrinking footprint. So Simon Property Groups has to be a little more conservative with their cash flow going out as the retail sector continues to kind of stabilize in this post-pandemic world.
Simon Property Group, a real estate investment trust, a REIT, currently yielding over 4.27%. You just got a nice 7.7% increase up to $1.40. Congratulations for those that own it. And it's the first dividend again increase since they cut it during the pandemic.
So we're rounding third. We're heading home to that fourth dividend increase we want to talk about here. That company is First Bancorp, FNLC. It's no secret that Laney and I love the banking sector. We're starting to talk more and more about banks, large and small. We featured three of the largest banks, but our true bread and butter is the community banking sector. So before we dive into a little bit more trends in the banking sector here, we'll highlight this dividend increase. They announced a 1 cent per quarter dividend increase from 31 cents to 32 cents, a nice 3.2% increase here in the banking sector. That brings their dividend yield to almost 4.4%, which, hey, is very solid. But Lanny, do you want to give a quick breakdown here about the banking sector and what we should expect to see with the dividends?
The big banks passed the stress test still, and they're coming out of the pandemic stronger than ever. So pay attention, as most banks will probably start raising their dividend now that it's not taboo to not only increase their dividend, but also do share buyback. So expect both of those to be hot and heavy here in 2021 from the banking industry. I know Bert's been swallowing up that ticker symbol C, Citigroup. So first, Bancorp, ticker symbol FNLC. It's no surprise that they came out with a 3.2% dividend increase up to 32 cents from 31 cents. And it's just a nice community bank, currently trading at about 1.4 times book value. So slightly on the higher side, but that dividend yield is actually over 4.3% with that dividend increase.
Yeah, so the sector, we're going to continue to see a lot of increases here at the banks. That even these community banks, they have a lot of capital on hand. They're performing very well. There weren't those poor losses that you were expecting with a lot of the loans. So they have very strong, very liquid balance sheets. So you're going to start seeing these dividend increases continue to trickle in. We've seen a lot of small community banks announce 3 to 5% dividend increases to put that capital to work. So fantastic. I know Lanny and I both own First Bancorp. It's just a great community bank, as he said.
There it is. So that was 4 dividend stocks, increasing that dividend during this last week, full week of June here before we head into the July. 1st of July, July 4th week, birthday boy Bert week. And, in summary, first we had Kroger. We had Kroger with a 16.7% increase. Then Darden, ticker symbol DRI, with a 25% banger. And then, yes, we had Simon Property Group come in with a nice 7.7% increase. Last but not least, First Bancorp FNLC with a 3.2% increase.
So everybody, let us know how many dividend increases from this list did you have? And if we didn't feature one, please tell us about other dividend increases that you received last week that weren't covered here in this video. I know I own 2 of the 4 companies, actually one of the higher percentages recently for me. I've struck out in a lot of our dividend increase videos. What about you, Lanny?
Same, 50%, 2 out of 4. How many do you own? Let us know. If you haven't already, give us a thumbs up. Subscribe to the channel as we almost hit that 10,000 subscription mark. We appreciate all the love and support as we continue to bring you the dividend news that you haven't been able to receive. That was Bert, and this is Lanny from the Dividend Diplomats. Over and out.